Hi there and welcome to the latest episode of Nestegg Meet the Managers series. I think in the last episode, if you tuned in, we talked a little bit around the economy, particularly with maybe some indicators or some signs of some slowing down. Joining me today is James Mawhinney, who is the Managing Director of Mayfair 101. James, welcome back.
Thanks, David.
Broadly speaking, and we were talking about this off camera as well, we did actually sit in this very room talking about the economy slowing down. There was a few indicators that we saw. Look, I don't want to say to anyone we told you so, but we are seeing even more of those indicators coming on. I think for investors, the time to understand when is the option to look at more diversification, maybe more security within their investments, but also for the people that are still trying to find yield, which is obviously the thing that investors always want, right? How are you finding it in your space though? What are you kind of seeing at the moment there?
Yeah, look, our group's very well diversified, not just within Australia, but a lot of our investments are actually overseas. So we're not really struggling to find the yield perhaps that some of the investors are finding in Australia. And I think that's one of the great things about being an outward focused company. There's not a lot of organisations in Australia or even funds that are either purely focused overseas, or a vast majority of their investments are focused quite internationally. There's a lot of Australian property funds which are finding it a little tougher at the moment. Not to say that they're not generating yield, certainly some of them are still doing quite well. But certainly, given that Australians have got a lot of their eggs in one basket with Australian real estate, most of the people either have money in the bank or they have it in Australian real estate. Interest rates and bank deposits really aren't paying much at the moment, and the Australian real estate market has obviously certainly come off the boil. Yeah,
for sure. And I think that, it's a really interesting point you mentioned there about a few of the ways that Australians sort of look at investing. For one, we have this love affair out here with property, which we all know. We all know that's not exactly a secret anymore. However, I think also one thing we were talking about previously also was we haven't really, apart from the GFC, which affected globally, but Australia itself hasn't had a particular recession for 27, 28 years, which I think. Maybe do people become complacent if there isn't any urgency to change or to at least look at your portfolio and think, should I be looking at other types of assets? Is that something which is quite common?
Yeah, look, I think there's definitely a herd mentality when it comes to investing. Typically what happens is that the institutions will move their money first and the retail investors will move their money last.
Yeah.
So we expect that with the economy coming off the boil, there's a lot of organisations at the top end of town that are now looking overseas to make investments. We kind of started down that path originally, whereas a lot of the retail investors, just by virtue of access to investments, it's a lot harder for retail investors to do much with their money beyond, say, putting it in the bank or putting it in Australian property. That's typically what the average man on the street will know and understand.
One thing which we touched briefly on a second ago, but I think is very important, is obviously that hunt for yield. Income is such an important thing for Aussie investors. Now, I know that you have recently endeavoured or put the team across a new product which essentially looks at that as a sort of focal point for fixed income. Is that part of the Mayfair Platinum Suite, or is that a new initiative? Can you give us a bit of an idea?
Yeah, look, it's both a part of Mayfair Platinum suite of products, and B, I'm pleased to say it is a new initiative, and it's really come off the back of investor demand for fixed income and secured fixed income products. So we've developed a product called M Fixed Income. M obviously stands for Mayfair, where we pay investors on a monthly basis a fixed rate of income. That rate of income sort of ranges from mid to high 2s up to around low 4% or thereabouts per annum. And importantly, we provide security with dollar for dollar backing.
Sure.
We have an independent security trustee which oversees our collateral pool, and the collateral is made up of either cash, as in Australian dollar cash, and an Australian bank account, first registered mortgage Australian property. So in other words, investors' money is secured against first registered mortgages in Australian properties, a bit like what the banks do with a lot of their investment strategy,
right, yeah.
And other assets that we also have within the group.
Perfect. And I think to sort of see that going across, you've kind of in a way secured that portfolio by the sounds of it with some real solid states. So it's not a case of sort of looking at initiatives which you're offering fixed income in a new place, but it's also something which is very secure and known to yourself, but just maybe tweaked in the way that you've packaged it up, which sounds very good.
Yeah, look, for us it made absolute sense to put up part of our asset base as collateral for our investors. It does obviously mean that we're not necessarily paying the high rates that we have in some of our other products, which are still obviously very available to investors. One thing that we often like to see people do is actually have investments across a couple of different products. That way it gives them a bit of a blended yield as opposed to just one particular fixed outcome.
Yeah.
Also gives them exposure to different asset classes too. So good thing about our M fixed income product, as I said, it is secured, it's asset backed, dollar for dollar security. That portfolio gets revalued at least annually to make sure there is dollar for dollar security.
Yeah,
It's something we've put a lot of time and planning into very carefully to make sure that investors' capital is protected.
Absolutely, yeah, I think that's really important. It's good that you're across that. Is there any sort of more of an interest towards, because I know you're a massive advocate for diversification, can you give me, and I think our listeners out there, just a bit of an idea in terms of where currently that sits on your model? I know maybe the new Mayfair Platinum Suite is probably geared towards that diversification, of course, but maybe just an idea would be quite good.
Yeah, so from personal experience, many years ago, I made the mistake of not diversifying. Had all of my eggs in one basket, and admittedly learnt the hard way and very costly exercise that diversification, regardless of how bullish you are about a particular investment, you have to still have your eggs in other baskets too. So our group has been very much focused on diversification and examples of that. We have investments in over 10 countries. We have investments in over 5 major denominations or 5 currencies, investments in over 10 sectors, and businesses ranging from earlier stage companies through to decade-old businesses that are profit-making and everything in between. So our value proposition to investors is we pay them effectively a fixed rate of interest on a number of our products, provide a customer service level that we're renowned for, and is certainly something that people are finding that they're struggling to get in other products and other traditional cash products. And importantly, it gives us then access to capital, and we basically take care of the diversification on behalf of our investors.
Yeah, for sure. It's amazing the fact that, and I think we've spoken about this before in other podcasts and videos over at Nestegg, but it's amazing that investors really, you only learn what kind of investor you are by investing and doing more trades.
Doing it yourself.
Yeah, exactly. Do you know what I mean?
Right.
It's interesting the fact that some people make those mistakes, but to actually take them on board and learn from it is another thing. So it's interesting that you took that on board very, very much so and take that very seriously. I do have to say as well, one of the things we've all been keeping up to date with as well, and I know you're quite a busy man, so getting your sleep is very important. I see you've obviously looked to change that and changed your bed over into Dunk Island, which is something. So is that your downtime now at the moment? Or I know it's a huge project, but is that sort of how's that going? How does that even formulate?
Yeah, no, sure. So look, we were actually approached several months ago by the owner, effectively, of Dunk Island to see if we're interested in acquiring that asset. We saw that was not just a key asset, but the real estate on the mainland actually forms part of a much bigger ecosystem. So we've now secured over $180 million worth of real estate in Far North Queensland, and particularly the Mission Beach region. And we anticipate that over the next 10 to 15 years, which I won't be getting much sleep in, but over the next 10 to 15 years, we anticipate delivering over $1.5 billion worth of investment to the region. This is obviously going to have significant economic benefits. Dunk Island, I'm pleased to say, remains in Australian hands. We'll be looking at everything, and when we are looking at everything from hospitals through to education, obviously through to tourism facilities and other infrastructure, really to build this into becoming the tourist mecca of Australia.
Yeah, for sure. Well, congratulations on the purchase. I think it's not just a cool thing to have, but also very interesting to look at the way that you're looking at the foresight of the growth of your business and where you can actually have assets played into, which is good to see.
No, thank you. And it's also, as I said earlier, it's part of our diversification strategy. We already have international real estate. We have fintech companies with our businesses in emerging markets, Australian real estate, and particularly hospitality and tourism. We consider as just part of that diversification strategy.
Yeah, absolutely. I think it'd be pushed to diversify more than an island. So if anyone can beat that, I'll be very interested to hear what's going on. James, thank you very much for coming in. It's always a pleasure, and I appreciate your time when you're over here.
Pleasure. Thanks, David.
And if you wanted to check out further or previous episodes of Meet the Manager series with James, you can click the links below. You can also get in touch with us directly on our social media channels, and of course directly with me at editor@nestegg.com.au. Thank you very much for tuning in, and I'll see you in the next episode.